Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's absolutely packed program, we're going to be having a look at the 4 exact targets for the end of the current Bitcoin bull market. Now that we've had a breakout, everybody's now focusing on where this could end up. So we're going to have a look at, from the charts, from the previous cycles, exactly where they're pointing to. And we have 4 exact targets that the charts are pointing to. So we'll have a look at that. We'll also have a look at some of the places in between where we may well get corrections. And as per usual, we'll have a look at what's going on in the news, what's happening in the wider markets, and also the 60-day cycle to show exactly where Bitcoin may well be heading in the near term, in the next few days and weeks. So if that sounds interesting, then you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, just before I go into the 4 exact targets, I just want to update and modify one particular thing that I covered in the last video, and that was based on the Bitcoin price in the week of the elections. And I showed you these green lines here. These were the closing prices of the week of the USA elections. And of course, last week was this green line you can just barely make out. But I just want to point something out. And the main point was that in the week of the elections, the Bitcoin price, as shown by these green lines, you can see that these were the catalyst for the big parabolic move that came just afterwards. So from that week, this is where the parabolic moves started. And this is what we're expecting now after last week. However, there was one major point which I shared with the private members here on this channel, which I want to now share with yourselves. And that is, when you zoom out and have a look at the bigger picture, there's something that really stands out. And what stands out is giving us a clue as to where the Bitcoin price in the next bear market is most likely to come back to. And that is, if you look at the green line in the first cycle here, the following bear market came down to this level here. And if you look at the distance between that at the end of the bear market and the green line, i.e. the Bitcoin close in the week of the elections back in 2012, you can see the distance is quite big here. Then in the next cycle, the closing of the price was here in 2016 with this green line, and the following bear market came down to these levels here at 3,100. And you can see the distance between the end of the bear market and the green line was shorter than the first cycle. And this has been getting shorter in each subsequent election. So in the last bear market at the end of 2022, that green line from 2020, you can see quite clearly here that the bear market came very, very close to that green line. So each subsequent election has diminished the gap between the bear market end and the election date weekly close. So what that's telling us is that more than likely, with a higher probability, when we come to the next bear market here, so today we're going to have a look at exactly where this price could go to, but the bear market following it, the clue here is that with a higher probability, we're going to hit this green line, and that green line is at 69,300. So just bear that in mind, and we'll come back to it obviously much closer to the time over here. Okay, I'm going to take away all those green lines and the white lines where the elections were, and we're going to have a look at the exact 4 prices where the current bull market could go to based on exactly what's happened in the first cycle, the second cycle, and the last third cycle. Because what they're doing is they're pointing to 4 major targets that we can really look forward to in the last phase of the current bull market here. So this is the first cycle here, and to do the measurement, I'm going to use the Fibonacci retracement because it's given us a very strong clue as to what may well happen in the current cycle based on what's happened in the previous cycles. So if we have a look at the Fibonacci retracement from the top here to the bottom of the bear market, I'm going to give you the settings. The style of the settings are these, and at the bottom, please remember to tick the Fibonacci levels based on the log scale. So what we see here is that the end of the bull market in the first cycle, which was in November 2013, came up to the 2.272. And that was at around about the 1,100 level. So you can see quite clearly it's topped out exactly that price there. So this is the first one that you have to keep in mind, the 2.272, and also this one here, the 2.36, because you'll find that this is going to be very critical as well. If we move on to the second cycle, from the top of the previous one in November 2013, to the bottom of that bear market, this time we had the market coming all the way to the 2.36 level here. So it went higher than the previous 2.272 and it topped out just above the 2.36 at 19,800. So that's two data points we have in the past. And if we move on to the third cycle, measuring from 19,800 here to 3,100, the bottom of the bear market, while we would have expected a price anywhere in this region in the last cycle, which would have been around about between 200 to 250,000, what we did was to top out at this level at the 69,000. And the Fibonacci level at that point was the 1.618. And that was at around 62,000. So in the previous three cycles, what we've done is we've topped out at the 2.72, 2.36 and the 1.618. So with a high probability, you would expect that the current cycle is going to be anywhere around those 3 points. And of course, if Bitcoin throws a curveball, it could be quite easily outside of that. But we also know that the 1.618 is an incredibly powerful Fibonacci level where Bitcoin has a high probability of always coming up to some resistance at that point and support at those levels. So from those data points, if we were to extrapolate that information and bring it to the current cycle, then we get three particular targets that we must just be aware of. So this is where we are in the current cycle. The top of the previous bull market was at 69,000 and the bear market was at 15,400. And what these are giving us now are, firstly, the first target is obviously going to be the 61.8, the 1.618 here. And that is giving a price of 173,000. And we've done quite a few measurements which have given us a price around about the 150, 170 mark. So this would obviously make sense as the first target. The second and the third targets that we've had from the previous cycles will be the 2.272, and that is running at 461,000. And then the other one at 2.36 is running at 526,000. So these are the three exact targets based on the Fibonacci level: 173, 461 and 526. So let's see what happens in the coming 6 to 12 months when we expect the market to top out. But there's one other measure that I'd like to do, which I've done in the past, but it's also quite accurate. We also know that that is a very good measure of finding a target for the end of this bull market. And that is the 1-to-1 extension. So if you take the 1-to-1 extension from the bottom of the bear market at 15,400 and you take it to the 73,000 that it reached here, and you do the extension from the breakout, which is where you would normally traditionally do that, and the breakout obviously was at this point at the 70,000, and the target is giving us there is at around about the 330,000, and we have done quite a number of measures which have pointed to the 300,000 as a target. So those are the four main targets that we should just keep that in mind. At the end of the day, nobody has a crystal ball, nobody knows the exact number. But what we can always do is elicit information, deduce the information from the charts, because it's always giving us a clue as to where the price is heading. So I hope you found that exercise quite useful, because in the absence of not knowing, this can go absolutely anywhere. And quite a few people ask, in terms of the short term, where could we expect a pullback, a correction? In the shorter term? Well, the best way to look at that is, again, with the Fibonacci retracement from the previous high here of 73,800 and the low that we got at 49,000. So just have a quick exercise of looking at that, of where we can expect this little pullback from where we are now. So if we do the Fibonacci retracement from the top here, back in March 2024 at 73,800, and the bottom that we reached at 49,000, the first thing that I always notice is this figure here, the 61.8. Now at this point, so the price here would be 94.5, call it 95,000. And the reason why this is quite important is because when the price actually comes up to this level, if indeed it does, everybody will be expecting 100,000, because we know that Bitcoin has a habit of shaking people out at the time when they least expect it. So while everybody will be expecting 100, the chances are that at the 61.8 at 95,000, there'll probably be quite a big shakeout here. Maybe down to the next level at this point, at the 1.414, but it could go all the way down here to around about the 12%. But before we get to the 95,000, we have these levels as well. The first level is this one here at the 1.272, and that price is at 82.5. So this is where we're just approaching now, at 82,500. So just keep an eye on this level, 82.5, for a local pullback or just consolidation in this range. And the next one after that is the 87,100. So between where we are now, currently as I'm doing this video, the price for Bitcoin is at 81,400. And the first level to look out for is the 82.5, then the 87.1, and then this one here before we get to the 100,000, if indeed we do, and the probability is that we will. So in the shorter term, these are the three targets to look out for: 94.5, 87, and 82.5. And if we have a look at exactly what's going on in the markets and what's in the news, and the main story out there at the moment is that the MicroStrategy's Bitcoin portfolio has surpassed the $20 billion mark. And as the Bitcoin price rises, you can expect quite clearly that MicroStrategy is going to go much, much further than the 20 billion. And also, now that the prices have started to break out, we can expect to see this on a regular basis. People calling for 110 here, then there'll be 150, then the 200, etc., etc. And this is something that we really have to guard against, simply because when you start to expect these numbers, at any point up to those numbers, Bitcoin has a habit of shaking people out just when they least expect it. And it really traps a lot of people. And one thing we must keep our eye on, and that is the liquidation heat map. This is where the leverage players have got their stop losses. This has provided a very accurate range of the Bitcoin price to actually focus on. And you can see quite clearly here, we've got a yellow zone at 77,800. And at the top of that is this particular zone here, at around 82,400. And we've just seen with the Fibonacci retracement, this is exactly where the 1.272 Fibonacci level is. So there is some confluence there at these levels at around about the 82.5. So the price could quite easily take that out and then have a minor correction at that point. So keep in mind these two prices, 82.5, and we could have a correction down to the $78,000 mark here. And we've seen over the last few weeks the record numbers of the inflows into the ETFs over here. And when we look at the asset inflows and outflows, the BlackRock IBIT is still having record numbers coming through. So the demand seems to be continuing at the moment, at least anyway. But we are getting some more red numbers filtering through. But something of note is that the Grayscale Bitcoin Trust, which was losing quite a lot of their Bitcoins, most of those are now being picked up by the lower fees of their own Grayscale Bitcoin Trust down here, the Mini Trust ETF. So while they've lost 587 from the major one, most of that's been picked up by their mini ETF here. But certainly, on the whole, the ETFs are still powering ahead with large amount of inflows. Okay, if we move on to the wider markets, the first one obviously to look at is the dollar. And it's quite unprecedented at the moment that we've had a massive run on the dollar here. And we were expecting this kind of a counter trend rally, and these were our two targets here, the yellow box here and the 78.6. So the box was the 61.8 and the yellow line here was the 78.6. And what we've done so far is come back to this trend line here. So it's powered through the Fibonacci levels and come back and finding some sort of resistance at the upper level of this trend line. So you can see that at this point here, it was actually looking like it was going to be an evening star pattern where you get a solid green candle followed by a small bodied candle. And last week, this was looking like a red candle here, and that would have been enough to push this down. What's happened is that the red candle has turned into a green candle here and powered above the previous high here. So at the moment anyway, we're finding resistance at the red line, and we would expect some rejection at this point. And this is really quite unprecedented because while the dollar has been going up, the wider markets have now been correlated with it, which is completely the reverse of what you would expect. We all know that the dollar has an inverse relationship with the markets, but in this period of time, and this happens rarely, but it does happen, and that is that the dollar and the wider markets are all going up at the same time. And we can see the evidence of that with the SPX. And as we've been noticing over the last many months now, that the double top, or even the triple top here, where everybody was expecting this to come back down, but the cycles were telling us that this was a midpoint here. So the chances were that the prices for the SPX was going to go higher. And what we've done is we've come into the 60-day cycle end here. And as per normal, we've come into the bottom of it and made a new cycle just at the support level of the previous resistance here. And we've now started the new cycle for the SPX. So we've got quite a lot of the cycle to go. And this seems to be aligning quite well with the Bitcoin cycle as well. So at the moment, we're at record levels at 5,995 on the close on Friday. So we've ended the cycle here from the previous cycle low on day 64, and the 30 days is going to take us to the midpoint, which is going to be the middle of December, around the 11th of December. So that'll be the midpoint, and the end of the cycle will take us to the end of January. So this is where we've now got a clear run for the SPX, where you should really expect a price above the 6,000. So obviously we're going to get some sort of a mid-cycle correction here around this level. So we would expect something like this, coming back into the mid-cycle correction and then moving on to the end of the cycle. So let's see where that goes, but certainly looking incredibly bullish. And the 27th of January will take us more closer to the inauguration of the next administration to take over in the White House, which will be on the 20th of January. And moving on to gold, as expected, we are now getting some sort of a correction after many months of green candles along the way. So we had 8 green candles out of 9. So the gold was very much due a correction coming up. So this may well be the correction. Obviously the current monthly candle hasn't closed yet, but we are getting some sort of a correction. So when we look into this current monthly candle here and look at the weekly time frame, what we see is a very powerful bearish candle, the gravestone doji candle. We can see quite clearly that we seem to have topped out and now coming back down below the blue line, which is the 70. So how far this will go, I would hazard a guess that below this green candle here, at around about 26, we should get a correction at least down to this level here before we power back up again. And if we move on to silver, very similar. While we had a breakout, there was always this danger that it may well follow gold and have a correction here, and this is exactly what we're getting. And once again, on the weekly chart, we're getting this bearish candle right at the top, and this is now bringing the price for silver back towards the support levels one more time. So once again, the gold and the silver having a strong correlation with each other and both having some sort of a correction. But I also want to mention this incredibly important factor, and that is that the retail interest in Bitcoin has just taken a big move to the upside here. And why this is critical is that the last time it did that back in 2021 was here. And when it broke out from this line here, you can see quite clearly all the way along there. Once we broke out at that point, that was the start of the parabolic move, which culminated at the end at the top of the bull market. So we're seeing some really good, strong signs that the retailers are now coming in. The man on the street is now starting to take interest because it's now being widely publicized in the main media that Bitcoin has broken out from its previous all-time high. So we can see from the demand side that there's a lot of demand being fueled for the Bitcoin price. So going back to the 60-day cycle, as mentioned in the last many videos now, we had this development of the structure for Bitcoin where we reached 73,800 back in March 2024, and we were making a series of lower highs here and the series of lower lows along the way. So the actual structure and the trajectory for Bitcoin was very much in the descendancy here. And what we've noticed over the last few weeks is this change of structure. From the 49,000, we suddenly started to make higher highs along the way. And then as we've had these pullbacks, they've now created the higher lows along the way. So this was the change in structure that was quite well noted over the last few weeks. And with the end of the cycle here, it was particularly noticeable that we started to consolidate around the end of the cycle at these top levels here, around that 66 to 70,000. And this was really giving us a high probability break to the upside. And this is what it's duly done since then. So the question is, what is the real strategy here? Now that we've broken out, what should people do? Because I know that quite a few people think that it's a good idea now to take profits. And I really don't understand that. And while you may have a valid case, and you may have a valid narrative to that end, my own experience tells me that whenever you have a breakout of a previous all-time high, that is rarely the best time to take profits. And that's usually the best time to actually ride the profits as far as you possibly can get. And this is one of the main reasons why it's very important to remain open, fluid, and flexible with the Bitcoin price. And the main thing for me is always not to actually let your guard down, because we always know that Bitcoin, when the euphoria takes place, which it is at the moment, the euphoria of this and people calling for much higher prices and people calling for much higher prices, 85, 90, 95, 100, etc. And we understand that's a natural thing to do because you get caught up with the emotion of this breakout. But in between here, we must always keep our guard up, because we know that Bitcoin has a habit of giving us a big correction just when we least expect it. So this is why it's always very important to remain open, fluid, and flexible. Keep a neutral stance, not to get too euphoric when the prices are going up and not get too depressed when the prices are coming down. And the strategy has been exactly the same. We've been very consistent that once we got in at these 2 points at 17.5 and 15,000, the whole idea was to actually capture the whole of this move here. So at the moment, we've got up to this point. We were waiting for this breakout, and we've just now got the rest of the move to capture, wherever this is going to be, whether this is going to be 500, 400, 180 odd, 170,000, wherever this is going to be, the main idea is to capture whatever the destination will be here for the rest of this move. And really, the destination isn't really the important bit. The important bit is, it's very easy to get on board wherever people have got on board, and some people have got on board here, and that's absolutely fine. The real test, the real challenge, the most difficult thing is knowing when to get off. And this is where our Bexit indicators will come into use. So from now on, we'll start looking at regularly the Bexit indicators, where they are, because they will be the best guide of when to get off. Whether that's at 100,000, 200, 300, 400 or 500, whatever that's going to be, the Bexit indicators will tell us when to get off. And for those of you who've been following the Bitcoin miners and our portfolio in the private member section here, something very interesting now happening with the Bitcoin miners, and that is that they've now started to motor ahead and start to activate the leverage play. So if we have a look at some of these miners and what they're capable of producing, if you look at the pre-market currently, because of the big move that we've just had with Bitcoin, we can see here Marathon Digital Holdings in the pre-market is already up around 17% from the Friday's close. And if you take Friday for Bitcoin, which was this candle here, from the bottom, Bitcoin's gone up by around 8%. So you can see the leverage for the Marathon is at least 2 times. And if you take Marathon from the previous low here at around $15, Marathon has actually increased by 26% from the 4th of November here. That was last Monday. So in just 1 week, if you take into account the pre-market prices today, from last Monday to today, within a week, this will be up by 48%. And if you look at the comparison with Bitcoin, from last Monday, which is this candle here, which bottomed out, and at the current price here, this is 22% up. And we run a private members section here. And there what we do is we're running the Bitcoin miners portfolio, which we started on the 6th of January with around $100,000. And that at the end of 2023 had reached $434,000. And we use this money to activate a trading portfolio with the Bitcoin miners. And that trading portfolio from the beginning of 2024 is already at the close of play last week on the 7th of November was up by 29%. So currently from last week, this is at 561,000 from the start of the portfolio at 100,000. So with the Bitcoin miners prices going up, and as we saw with Marathon, it's going up by about 17%, this is going to be well over 600,000 from today. And the highest it's reached so far is 720,000. And what we do with the trading portfolio is we trade the Bitcoin miners in a very safe method called the ratio trades. And at the bottom of this video, in the description box, you'll find a members introductory video which explains exactly how the ratio trades work. And that's by moving from one miner to another based on the ratio charts and identifying the appropriate times to move from one to the other. If that's something of interest to you and you want to join the private members section here, where we cover all the relevant information for both Bitcoin and the Bitcoin miners, then all you have to do is click the join button below any of my videos, or in the description box you'll see the Bitcoin miners membership link. If you click that, and this is where the new members introduction video is here, which will explain how ratio trades work. So if you want to join us, click the join button here. And for the price of one coffee per week, if you can afford that and have all the opportunities in front of you for all the Bitcoin miners on a leverage play, then you'll have access to all the membership videos that we do on a Wednesday and a Friday, and also the market updates that we do for both Bitcoin and the Bitcoin miners on a daily basis at the end of the trading session, Monday to Friday. And this is the kind of thing that we normally do. We have a market update and any relevant information regarding articles which is relevant and important for both Bitcoin and the Bitcoin miners. Okay, I'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.